Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
What's going on, everyone? How's it going? Good morning, good afternoon, good evening, wherever you are in the world. Hope you guys are doing great. I have a nice live session coming at you in just a few minutes. Gonna wait for everyone to trickle on in here, and we'll get started. You guys doing well this week? Having a good week? It's been pretty good November for us. I'm not sure exactly what percent return we're up for the month, but I know we're doing really well. Trying to be transparent as much as possible. You know, that's who we are. I'm also going to be creating one of those full audit videos of our VIP Discord channel, so you guys can see every single setup, every single trade idea that we've sent to our group over the past month. I think I did that for September. I have to go back and do that for October. Totally forgot about that. So I'm going to try working on that over the next couple of weeks. Try to get that out. It's just a lot of stuff to put together, but you know, we like to be transparent with everyone and want to show you guys what we're all about. So good morning, everyone. Mark, good to have you on. You guys know the deal. Where are you guys from? What pairs are you guys looking at? You got Manchester, UK in the house. USA soccer won yesterday. Pretty stoked about that.
I was shocked by the USA v. England. Thought they were going to blow us out. That was the expectation, at least.
Yeah. I think we drew with them.
I know our friends over there in the UK probably aren't happy about that one.
Yeah. Michigan, awesome. Euro USD. Yeah, we can take a look at Euro USD. I don't really see much on it today, to be honest. MK, good to have you on here.
Hey, Gary. Paulo. Lisbon, Portugal. Nice. U.S. have a good team. Yeah, I guess so. Don't pay much.
I think one of their good players got hurt yesterday. I saw a few memes online. I guess he got hit.
Who did we play? Iran?
Iran. Yeah, we got 1-0, I think. I'm more of a football American type of guy, not more of a
real football.
Real football. That might stir some controversy.
Oh, yeah.
Philippines, Germany, South Africa, Bulgaria. Good to have you on, Simeon. HF. Yeah, HF's being a pain in the butt. I'll tell you that. We'll get started here in just a few more minutes.
Majors are just chopping around, really. Unfortunately.
New Jersey. We just want to wait for people to trickle on in, guys. Just be patient with us. We'll get started. Don't worry. Just want to hear where you guys are from. Let's see who's in the house.
Got Hugo in. Nice. What's up, Hugo? Thoughts on pairs beginners should focus on? I was actually just talking to somebody yesterday in a consult call, looking to join the community, and I had a little bit of discussion on this. I recommend starting off, at least if you're new to smart money trading, starting off on Euro USD and GBP USD, really the majors. But there's some other pairs like GBP CHF, in my opinion, that respect smart money really well. But I wouldn't. If you're learning, I would probably cap it around 4 or 5 pairs. That's really all you need to learn the concepts. And once you master them, you can kind of branch out to other exotics like Euro, AUD, or NZD, some yen pairs, etc. But I'd start off. EU and GU really are all you need in order to be successful and profitable in the markets.
Yep. Yeah, absolutely. Less is more, to be honest. Croatia, Indonesia. Hello, guys.
Nice. Croatia.
All right, I'm going to give it one more minute. Just let people trickle on in. I know people will probably be late, but that's all right. And then we'll go ahead and get started here. Obviously, guys, you already know what we're about here. These are not signals that we're sending. Okay, if that's what you're on for, you're on for the wrong reasons. Signals don't help anyone. We did that when we first started trading. I know a lot of people who did that when they first started trading. It just doesn't work. So the only way to be profitable in Forex or really in any type of trading is to learn it yourself, is to become educated and to practice the right habits. So we need to be using all this stuff only for educational purposes to see, kind of what our bias is, maybe the areas of interest we're looking for. Maybe you could take some of these trades. However, they're not signals. They're just used to help you learn and understand how we go about looking at the markets. That's really what these lives are for. Anything else is not what it's meant for.
Just points of interest, higher time frame, top-down analysis.
Yep.
So that you can pair it with your own, right? And hopefully you understand the concepts. You followed along our YouTube channel and our series on Trading Nut, and or those of you in our private mentorship ought to know how to execute right on these levels that we're talking about. Dose minus 35. Where are you? Canada?
Mm-hmm. All right, guys, we're going to go ahead and get started here. If you just want to save your questions for the end, as I am not able to see the chat as I go through my charts, we can do that. And then I'll open it up to everyone for questions, how they can go over some pairs if he has any, and then we'll go from there. All right. Can everyone, Aiden, you hear me, see me? Everything's good?
Yeah, I got you.
Good deal. All right, let's go ahead and get started here. Awesome. So I'm going to first start off by talking about, I have my list here. I'm going to talk about GBP USD first. So if you guys were on Saturday's live session, just from Saturday's live session, you would have already been aware that we were looking for original buys from just this previous high, right? There really wasn't anything in here to take advantage of. I know I have this level of demand marked up. It's not very clear, but it's really just getting deeper down into discount. If we pull our fib from the low to the high, we can see that, we're the start to the demand here, our last selling volume, which is this pullback before the expansion. We're hitting that 50% level, and we really want to dig deeper into more discounted price, 61, 71, 78.6. Now, we don't trade Fibonacci's, guys. That's something that, this is all retail stuff, okay? The institutions, they don't make their money, nor do they get in positions off of these Fibonacci retracements, okay? This is only to guide us in determining whether we're in discount or premium price. Okay, so we're looking to dig deeper, probably back down into this area of demand. Now, the only real stop loss area would probably have to go below this previous swing point here, which would not produce a large enough risk to reward for me. So I'm personally not taking this trade. This is only a 1 to 2. I have to stick to my rules, as I hope you guys are doing yourself. However, if those of you who are comfortable with 1 to 2s, I highly don't recommend it. But if that's the case, then that would be a potential trade that you could look for. Obviously, these are not signals, guys. Remember, this is just for educational purposes, just to try to show you our overall directional bias and what we're looking for. The market is still extremely bullish. Pound is very bullish. We've been buying in here all the way up. If we can see here going to the left, if I go to the daily time frame, kind of zoom out, this was our last major pullback that lasted about, about 30 days, so about a month's time before the expansion back to the downside, right? So this was our last pullback before our rally. So below 1.0520, this is where the liquidity rests to the left. Okay, that was our pretty much our higher time frame lows, our all-time lows, I think, actually. We swept that liquidity and it immediately had a reaction. So when the market goes like this, right, very strong impulsive move into liquidity and has this type of strong impulsive move away from it, this could be the telltale sign that, hey, you know, we might be going long in this situation. And because of the fact that these are all-time lows, 1.0520 is the all-time low for GBP USD, and we actually took it out and we ran it, I would not be surprised if GU ended up climbing higher. Now, I'm not saying that we can't have a pullback, but overall, I think that we can really make a move to the upside. I think that might be the case. However, we are still technically in a downtrend, and this was our last point of supply in here. Okay, so let's scale into this area and see what we can find. So at 1.2180, as we can see here, this was our last buy to sell move. If we look at the counter trend, we have a high, we have a low, we have a high, we have a low, we have a high, we have a low, we have a high, we have a low. And this is not, I mean, this could be considered a break of structure, I guess you can say. But really, this was that last buying volume that failed to generate a higher high above our swing point, and that's when we started to fall. Okay, so we really want to be looking for price to get back up into this overall level before looking for any shorts. And on a lower time frame, if I just use bar replay here, we can go to the 1 hour and see that we have relatively, you know, equal highs, sort of descending liquidity. So when we see stuff like this, especially when we have 1 touch, 2 touch, 3 touches, in order for a trend line to form, you need at least 2 touches, right? You need at least 2 points to form a trend line so that you can look for that 3rd touch. Now, retail is selling in here most likely, right? They see 1, 2, and then 3 touches of the trend line. Let me short it. So there's obviously liquidity resting above this high, and this is what we have finally run now. So liquidity has been run. We want to really come back up into lower time frame supply. So obviously, we, as just discussed, that was our last buying volume before the major expansion to the downside. But on a lower time frame, really, this is where we stopped. That was really our last buying volume here on the lower time frame before we started the downtrend. So I'm looking for 1.2180 to come back up and at least retest that level. If it's going to go short, I don't really think it will, but that's where we have to pinpoint our take profits, guys, is where could price come into before reversing against our trend. Now, what we could do is we could have a higher time frame runner, like we could take partials here and leave our position open for maybe a higher time frame push, maybe up into 1.25. That could be a possibility. So if we just zoom back out, obviously we want to know where we could be coming into. 1.25, that's another area of lower time frame supply in here. So that could be a good take profit level, and then maybe filling up some imbalance if we actually do break structure to the upside. So that could be a possibility. So, I mean, that's a 1 to 4.5, not a bad trade there. But I would definitely look to be taking partials at 1.2180 if we end up reacting from that level. So currently, you know, if anyone took this position from Saturday's live session, I guess you are in a little bit of profit at the moment. However, stops would have to go below that low, which would not give you the best risk to reward. But remember, these are not signals. This is just analysis as to what I see. So I'm looking for pushes back down into 1.191. Psychological level into this lower time frame demand. Stops would have to go below the low here, looking for further upside, right? I'm looking for excuses to sell the dollar and to buy pound. Okay, so GBP USD longs is what we're looking for. All right, next one, I'm going to go over USD CAD. So as of right now, we are in, and I think we may have just gotten triggered. Nope, not quite. Not exactly. Just missed. That's okay. So I talked about this yesterday. I mentioned, so I'm going to give you the bigger picture here before we go into the lower time frames. So actually, let's start off with the daily, do a little bit of the top down, and we can see that the reason why we were looking for shorts in here on a lower time frame was because price had come into a higher time frame level of supply. We can see after this expansionary move to the downside, this was our overall level of supply. And I'm sure you guys can see why that is, right? So that's that level of supply there that we wanted to retest, 1.385, 1.39, somewhere in and around that level. However, higher time frame, we have relatively equal highs. We could easily be going up to attack those at 1.1 4690. That's really a long-term swing. However, that's not completely off the table. But lower time frame, this would be our level of supply in here. And we actually came into that very, very nicely and had a strong reaction from it. So scaling into it, we can see we swept all this liquidity here, descending or ascending liquidity with a huge buy to sell, breaking the counter trend structure, which is right in here, buy to sell, pull back. We failed to generate a higher high here, and we started to make a lower low. So now we are in that downtrend, and we are looking for shorting opportunities, which is why we shorted it from here, 1.38. This is a clear psychological level. We can also see that we reacted from the higher time frame. We broke the swing point, right? We made that lower low, pulled back, failed to generate a higher high, made a lower low again. So now we're higher and lower time frame bearish. We create more descending liquidity. We go and run it and then fall and make a lower low. So this is our lower time frame level of supply where the liquidity was run. So that's exactly where we want to be looking for our mitigations. And we had that. And we just missed our take profit when price was down in here, 1.321 for a 1 to 10.8 risk to reward. Still holding that position. Most of my position is off the table. I've taken pretty much 80% of my partials. So just holding a little bit of a runner just in case we actually do come lower and hit our overall take profit. That is something that you guys have to get in the habit of doing. When price misses your level and reacts off of it, right, that we don't come into our overall take profit, you have to trust your analysis in order to, you just have to leave it. Right? When price starts to push away from it, don't be psychologically, emotionally attached to the position where you think that price is going to just move away from your trade and never return, right? We're still overall bearish here. We just need to be patient and wait for that overall take profit to be hit. And if it's not hit, if we end up actually going long, well, then so be it. That's why we take partials off the table. You can't win every single trade. You can't win every single trade in the sense that it's going to hit your overall take profit every time. You have to pinpoint areas in which to take partials. That's how we trade manage. And we have to be patient. If it doesn't hit our take profit, we have to just leave it. We can't get in the habit of taking partials or taking our overall profit early for the sake of getting scared that price is not going to come back down and hit our overall take profit. That is what retail does. That is the retail mindset. That is not a professional mindset whatsoever. That is why retail loses at the end of the day. That's why traders lose, is because of their psychology. We have to practice the right habits. So yes, I unfortunately missed my take profit by 15 pips, and now price is all the way back up here. However, I'm still pinpointing regions in which I can be looking for shorts, as I am already in this short from here, looking for an additional 1 to 3.7. So if this comes all the way down, not only am I in profit on this position that I sold it from, which I'll talk about in a minute, but also I'm still waiting for my overall take profit to be hit so I can make and extrapolate the most money out of the market for the trade that I'm in. It's just what we have to do as traders, guys. And it's not like you can do it if you want to. No, you have to do it, because if you don't, you're not setting yourself up for overall success. It's just not helping whatsoever. So yeah, there will be times where it misses by 15 pips and then reverses in the opposite direction. You have to take that as okay, it happened once. I can't be emotionally attached to the next trade to be able to say, oh, it's actually going to go long against me. I have to take all of my partials off the table now, because then what happens, the next trade actually comes into your overall take profit, and now you're kicking yourself for getting out early, right? And it's all based upon numbers, right? At the end of the day. So for instance, this is a 1 to 10.8. I've secured 80%. So I'm about 8% up on this trade, leaving the rest to ride at break even, obviously. So if it goes short, great. I make my full amount. If it doesn't, then I still make 8% and I move on to the next trade, knowing in the back of my mind that I maintain my psychology, right? That's the most important thing. So we have relatively equal lows here. I do fully expect price to come lower. I think we can run lower, especially because on the higher time frame, we haven't come into our overall level of demand, which starts right here. Okay. So we haven't pushed into that 1.321 level. We still are overall bullish, as we can see. We're making higher highs and higher lows. So I think that we have the potential of running lower into our overall level before running higher. before taking out higher time frame swing highs, right? Those relatively equal highs as just talked about. However, we did come into that overall level of supply. So could we actually break? There's a potential, sure. That's always a potential. So we'll have to just look out for that. However, currently the trend is bullish here. High, low, high, kind of breaking structure here. I know that I say that just because we break structure doesn't mean we're bullish. And it could just be an overall pullback, which I fully expect it to be for more of a expansion to the downside. However, dollar is still overall bullish, right? We did create a higher high, and this is a sufficient higher low. So we could actually continue like that. Price could just go like that and make a higher high. That is a possibility in my eyes here. So with that being said, although I am shorting from these two levels, or I'm looking to, the reason for that is because lower time frame, this is just a level of supply. It doesn't look like it here because I'm on the 1 hour, but lower time frame, that's a level of supply. It's also an imbalance between that wick and this wick. And then this level here is another level of supply here. We can see high, low. This is demand. We reacted from it, failed to make a higher high, lower low. So that turns into supply now. So I have those two levels for shorts, and I'm already currently in this up a pretty good amount. However, I am looking to hedge. So as we can see here, we have obviously made that low, and then we broke structure on a lower time frame. Doesn't mean we're overall bullish, remember. It just means we could be in for an overall pullback before a continuation, right? Because we're still higher time frame bearish in this sense, right? Because let's think about this in terms of structure. Let me go to the higher time frame. High, low, high, low, high, could be in for a lower low, right? So that's still the structure. All this stuff is just intermediate structure. This is the high that actually created this low. So just because we break this high, or maybe even this high, doesn't mean we're overall bullish. This means we could be in for a deeper pullback or a higher time frame retracement to be going short. Okay, so let's look at the lower time frame regions and what I'm looking for. So because I'm looking to hedge, still in shorts here. Great, I'm still in shorts from my original level, right? Still in profit. I'm in profit from my first position. Great. If it goes short, I lose on the buys. I win on my overall sells. The aggregate positions, meaning all the positions with the wins and losses totaled, will still net a positive amount. That's what I mean by aggregate positions still in profit. So as I'm looking to hedge, we can see we made a higher high here in comparison to that lower time frame swing point. We came down lower time frame. We swept that low to lower time frame level of demand, in which we created the higher low, and then the higher high, and then we had the overall pullback back down, and we mitigated that level. I was looking to originally sell this because I thought maybe, we could be in for maybe some sort of high, low, pullback, lower low here, more of the lower time frame swing, right? So I was looking to sell it at that level of supply here, right? And obviously we reacted, failed to make a lower low, and busted right through it. So then I turned around and I'm like, okay, well now because of the fact that we reacted from supply right in here, and we failed to make a lower low and we actually made a higher high, now this will turn into demand. So I was waiting for the pullback to buy it, and we can see we just missed that entry from yesterday. That was yesterday's London session, and we just missed before we had the big rally. So I'm still looking for these two levels, half risk and half risk. I have this open. This finally did hit now. So we can see here, this is a high, this is a low, and this is a high. We could react off this swing point here and go long again and just continue with the overall bullish structure that we have going on this time frame, right? So that's an opportunity. Stops are below this low here. I will look to buy it in here again if it's more of like a higher high, higher low, higher high, higher low situation, more of a higher time frame bullish run. So these are just lower time frame trends, right? So we're reacting off the lower time frame trend. We could react off the higher time frame trend, something like that. That's why I have those two valid levels. So if we end up going long, great. I may lose on the sells, but then I win on the buys, and still 1 to 13 and 1 to 15, almost 1 to 16, aggregate positions would still be in profit. Hedging is not always bad unless you're just buying and selling randomly. I'm buying and selling because I have a reason to do that. Higher and lower timeframes are not in alignment with each other, and I have my confluences and rule-based system being met for each individual position. I can't just because I'm looking to sell, just buy it because I want to hedge. That's not how it works. You need to be buying and selling at appropriate levels, if there are appropriate levels to begin with. So in profit on my sells here, sent that out. And now we're kind of reacting a little bit off this area of demand, which is just natural, but we'll just see what happens. So we're in buys and sells. Obviously, now that we're in both, one of them will win and one of them will lose. Still aggregate positions in profit. All right, so that's USD CAD. So what else I have? NZD Swiss franc. I don't really have much for this one. I mean, I guess I can have, some sort of lower time frame entry, but in all reality, we are extremely bearish on the higher time frames. I know it's blurry. I'm just zoomed out here. Lower low, lower high, lower low, lower high. Could be in for a lower low. We'll see. Currently, we're still in this pullback phase, right? We're still bullish on that time frame. Let's see, where could we come into before potentially going short? Well, and I'm going to go over this very quickly. Okay, this is not meant to me be like a teaching lesson. I'm just going to show you exactly what is happening in here. So it may be confusing. That's okay. I'll go over like what's going on in here now. But essentially, we ran liquidity, right? Big buy to sell. Lower time frame, we came into a level of supply, which is why we had that little black line. And I know you can't see it. It's just on a lower time frame. I'm just going to show you the 4-hour right now. We mitigated that supply there. So on a lower time frame, we created equal highs. We swept it with that buy to sell, pulled back, generated descending liquidity, and then we created that big buy to sell that swept liquidity and came into the mitigation of this level that swept that liquidity. So I know you can't really see it. I'm not meant to show you everything, right? I'm not going to go down to a lower time frame and show you because it just take too long, but just wanted to let you know what was going on to show you the mitigation train and such. So this is our last buying volume, sponsored move before our sell-off. So 5,940 and then this lower time frame level of supply, 5,950. Right. So we ended up making the lower low. So this would be the region in which we would like to see pullbacks into for potential shorts. Now, I'm not just going to be placing sell limits here, guys. This doesn't mean to just short it. It means that if we're going to go short, it would be from this level. So take profits on any buys should be at that level. Hopefully that makes sense to you all. So lower time frame, higher high, higher low, higher high, right? We're bullish, obviously. Lower time frame was broken here. Boom, boom, broke structure. Okay. Now what happened in here? Well, we created equal lows. We pulled back, sell to buy into a level of demand. And obviously that's why, because we broke structure, we didn't want to make a lower low. We made a higher high, a higher low, and a higher high. So the trend on the lower time frame there is bullish. On a lower time frame, this is a level of supply, and then this is a level, or excuse me, demand. Then this is a level of demand. Okay. So I had two levels. Only one of them was hit, and that's okay. That's why we have multiple levels sometimes when it's appropriate. Obviously, I just don't have two levels every single trade because there may not be two valid levels. In this case, there was, but only one of them was hit. We can see we formed ascending liquidity here. People were buying off this lower time frame trend line, and then guess what? Sell to buy. Retail traders lost, as they do. So sell to buy, created a higher high. So what do we naturally expect? A higher low. Right? So where can we pull back into before going long again? So we're in from this level, and then the mitigation on the lower time frame was right there, 5,850. That was the price. So now we're in two positions going long. So this is a 1 to 3.5 essentially. This is a 1 to 3.3. So just about 6.8, just about 6.8% if we just come up and hit 5,950. Now, lower time frame, we can see higher high, higher low, higher high. So what do we naturally expect? A higher low for a higher high. So where could we pull back into? Now, guys, just because we see structure here, just because I'm seeing, higher high, higher low, higher high, and we expect a higher low, right, which we do based upon market structure, that doesn't mean there's always a setup. So, guys, if you are looking at a chart, if you're relatively new, or, haven't been trading for so long, and you just can't find a setup, probably means there's not a setup. Don't try to force anything. That's what retail traders do. That's what beginners do. Don't get in the habit of trying to force something for the sake of being in a trade. Just because we're bullish here doesn't mean I need to be buying. If the only way I would be buying is if there's an actual setup that's forming. All right, so it happened to be on the 20-minute time frame. As we can see, we're starting to accumulate in price, and then we had that last selling volume, and then we broke structure because all this is just lower time frame swing points. Finally broke structure to the upside, we retested or repriced, and then made a higher high. So this would be that level of demand in which I want to come into. So we failed to do so here. If price comes back down, I would be interested in buying from 5,890. It's a psychological level within that demand into 5,950. So that's what I'm looking for, potentially sweeping sell side liquidity and then going higher. That's something I would be on the lookout for. So this right in here, I'm having two positions just because if I just base it off of my entry and then the appropriate stop loss, this would be like a 1 to 1.3, which obviously does not meet my rules. However, if I split it up half and half risk here, half risk here, yes, this is still not a great risk to reward, but then we have a better risk to reward if I place obviously the same entry, but this stop loss is going below the demand. Obviously, this stop loss is going below the swing point. This is the appropriate level because this is the low that created this high. So technically, we can go like this 99% of the way down and make a higher high, and this still would technically be bullish, right? It would still be respecting market structure. So sometimes it will go like that. It will take out the low, but it's still respecting the market structure there, which is why stops really have to go below the low. But since the risk to reward isn't there, you can split it up half and half and then have one half of your position. Obviously, both of them are at the same entry point, but one of them is at the overall lower low here, or excuse me, stop loss level. And then the other one's right below the demand for a nice 1 to 3.3. So it just could help out with risk to reward a little bit. So that's what I'm looking for NZD Swiss franc. Let's see, GJ is up next. So GJ looks really good. Now, I talked about GJ for quite some time. I'm not sure if you guys still remember this position, but this was still a valid level. Now, guys, if you are a part of my VIP community and I send out, they're not signals. It could be trade ideas or analysis, I should say. Just because I send something out and it doesn't hit immediately doesn't mean it's invalid, right? I sent this out when price was like right in here, and we actually made a higher high and we were looking for the pullback. So that was what, back in Thursday the 17th. So that was what, 12 days ago. So with this is what, 2.5 weeks, 2.5 trading weeks essentially, because 5 days is a trading week. So just because 2.5 weeks goes by doesn't mean it's an invalid trade. We still have to look for what's going on. So higher time frame, we are extremely bullish. We can just see that. Right? Even if you didn't know what was going on, that's a swing high, that's a swing low. We've made a higher high. We're bullish. Where's the lower time frame trend? High, low, looking for a higher high, right? So that's what we're looking for there. Counter trend, low, high, low, high, low, high, reprice, higher high, right? That will turn into demand, which is exactly why we reacted right there and had that wick entry there. Sweeping equal lows. Why do we sweep equal lows? If people are buying, their stop loss has to sell their position back to the market. That's essentially how stop losses work. That's the transaction when you get out of a trade. If you're buying, you have to sell your position back to the market to get out. If you're selling, you have to buy your position back from the market to get out. That's what creates or generates your loss or win. So in that case, when people are buying, they have to sell their position back to the market because they're placing their stop loss below the equal lows, because retail traders are, I'm not going to say it, they're just dumb. They don't know how to trade. So they trade this support, right? They're buying off support. So when the institutions run their support and laugh in their face, they lose. Forces them to sell their positions back to the market. And now the institutions are buying, and now they have someone to sell to because they had to buy their positions back. Now there's a buyer, and now the institutions now there's a seller because they have to sell their positions back. Institutions are buying. Now they have someone to buy from. They're selling, institutions are buying. There's a buyer and a seller because that's how it works. For every buyer, there's a seller. That's how the markets are moved, guys. That's the real reason how money is transacted and how supply and demand can flip, how liquidity is induced and why it's induced in the first place. Liquidity is not induced just because they just want to do it. There's a real reason behind it. Yes, to screw over retail traders, take their stops, but so that they can also get into their positions at the best possible price at valid levels in which we were already looking for anyways, just based upon price action. So anyways, we had the reaction, higher high, higher low, looking for a higher high. We scale out to the 1 hour time frame. Actually, I'll go into a lower time frame here, 15-minute. And it was just in here, guys, just taking, price off of each and every demand. Equal lows, sell to buy, broke structure. This is demand. You could have pulled back in here. You could have made money. Higher high, higher low, higher high. Where do we pull back into? Counter trend, low, high, failed to make a lower low, higher high. This is demand anywhere in there. Guess what? Reaction from that level, sweeping liquidity. That's another entry. Looking for a higher high again. It's so simple, guys, but people try to complicate it. It does not need to be complicated. We just need to have our rules in place and then build confluence. And I say it's simple. It's simple when you get the hang of it, but it's also, I shouldn't also say simple because that may think that you can just go and find something every single day on any single time frame and any single pair. That's not the case. The setup, when you see it, should be very simple, right? But there's not always a setup at every given time. When traders force trades for the sake of being in a trade, you're just setting yourself up for failure. And that's why we lose, right? So again, equal lows, the mitigation of that demand I showed you, sell to buy, mitigation there, sweeping another low. Counter trend, boom, 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 failure to make a lower low, higher high, that turns into demand. So that's why we had that demand in the first place. It didn't come into it right away. We actually formed this ascending trend line. So 1, 2, 3 touches here. And we actually had our fourth touch right in there. So we created a higher high, overall pullback, higher low. And then we came into it here, had a little bit of drawdown. Stops were below the overall low here, not below the demand. Okay. So as you can see, and so we can see accumulation forming, very discrete lower lows and lower highs being formed. And now guess what? We form ascending liquidity. We come down 1, 2 in the morning, sell to buy, London session sweeps out that low. And now we can continue for the rest of New York session to the upside. So we have broken the counter trend structure now. That's a swing point. That's a swing point. That's a swing point. That's a swing point. Now we've made the higher high. We have shifted structure. Boom. So now we can be looking for lower time frames, scaled in positions to trade from, right? Higher time frame, that was our entry. Now we can scale into the lower time frame. Doesn't mean just the 15-minute, guys. Doesn't mean I trade 15-minute. I'm just scaling in to show you what the setup looks like. So in this case, the setup happened to be on the 15-minute, could be on the 10, the 9, the 8, the 7, the 6, the 20, the 25, whatever looks the prettiest, right? We just have to keep scaling in and scaling out to see what price is doing. Price is only being delivered one way. We just have to, time frames are just scaled in or scaled out versions of the exact same thing. So we can see that we have the entry. We're in good profit now. Stops are now moved below this low here. Okay, we can move it below the low. But for the sake of this, I'm going to keep it where it was, wherever the heck it was. So yes, I'm moving stops below that low. We can see the huge sell to buy, made the higher high. We want to see a pullback, right? Because for every higher high, we want to see some sort of higher low into discount. Great. If we get it, phenomenal. We're looking to re-enter again. If it just continues long, well, then there's no re-entry at this current time. And we're still in our original buy position. So what I'm looking for is, well, kind of two levels, as a matter of fact. I like this level of demand as well, but I also like this one. This is more of that intermediate repricing. We can see that this is supply, just lower time frame supply. So lower low, lower high, we react off supply, failed to make a lower low, higher high. That's where we broke the structure. So that will turn into demand. Stops would have to go below that low here. Okay, so that's my additional position. That looks really good for GBP JPY longs. I'm looking for pound strength overall, remember. AUD CAD and NZD CAD looks very similar. I'm not going to go over this in too much depth. I was really hoping that we would get our pullback into our original demand levels. I'm not going to go over this too much. We didn't have the overall pullback, and that's okay. That's fine. We move on to the next setup. If price ends up coming down, I'm still having these as valid because this is where the structure was broken, meaning This is the overall low in the market that created this higher high. This is where the downtrend was finally broken to the upside. So because of that, and since these lower time frame demand levels, you see demand, demand, lower time frame demand. I know you can't see it because we're on the 1 hour, and this imbalance here. So 3 different levels. Lower low, lower high. This is where we failed to make a lower low, and that's where we broke the structure. That's where the structure was broken. So because of that reason, I would classify this as one expansion. If we break and come lower, it's not a break of structure to go short. Don't think that that's the case, because we have to have a holistic perspective. This is a higher time frame demand that we reacted from. So this would just be an overall pullback to go long. That's what I would treat it as. So these 3 are still valid for my buys. I'm still holding those positions for the time being. Okay. We already talked about that plenty of times. I'm not going to go into it. Lower time frame opportunities. Well, yesterday we can see that we swept. This was actually the 28th, so 2 days ago. This descending trend line. 1 touch, 2 touches, 3 touches, 4 touches of this trend line, and we broke through it, sweeping liquidity, and then we made a move back to the upside. Right, and that's where we made the higher high. So this is, in all reality, a sell to buy. So that's where we can be looking to buy. However, we have to see sell to buy, reprice, continue. This is also just a mini time frame level of demand. It's tough because how do I know if price isn't going to come all the way back down into here? Like that would be a pretty decent size retracement. It would be what I would prefer over this entry from this level, because this wouldn't be a deep retracement. However, when you have such strong impulsive moves like this, you don't really get deep retracements. So that's why I'm having 2 different levels. My first level is that this demand stops are going to go where our second entry is. So if we lose this, then we're guaranteed to get in this one. And then stops will go below that low. Regardless, this is a 1 to 3.4, and this is a 1 to 4.1. Risk rewards are still there. These are my 2 areas of demand to buy from. NZD CAD looks the exact same. Equal lows, sell to buy, just lower time frame continuations, right? We're just continuing. That's really what we're looking for. So 15-minute sell to buy, reprice, continue. This is our overall demand. And then we have a very small level of demand. I don't know where it was. 30-minute. Yeah, 30-minute doji candle. I like that too. So 2 levels there. That's what I'm looking for. NZD CAD. All right, last one. I think I have NZD JPY. Okay, so with NZD JPY, we have to do a little bit of top down here. So if we scale all the way out, we actually go to the weekly. Going to the weekly time frame. As we can see here, we are currently bullish. Right? Higher high, higher low, higher high, higher low. We came into demand, and we're looking at potentially making a higher high. However, if we are to go short, where could we react from? Well, you simply would want to look at this from just a higher time frame perspective. This is imbalance. You can see we came into that level there. Beautiful imbalance fill. We had the reaction, counter trend, high, low, high, low, high, low, failed to make a higher high, lower low. So this is our level of supply. But if we want to scale into that, there's a lower time frame level of supply here. I'm not going to go into all of it, but anyways, that's where we're looking for price to come into. 8833, 90.2. I guess you could say like 90. That would be a good level. But even so, higher high, higher low, higher high, higher low. Could be in for a higher high, but anyways, lower time frame, we're making higher highs, higher lows. So we still want to be looking for bullish pushes, at least intraday or intra-week, right? At least up into kind of these 2 black horizontal lines. Daily time frame, again, you can see higher high, higher low, high, low, high, low, looking for a higher high to take out that high there. All right, so just following the structure. Also, shoulder, head, shoulder, demand, fake out, sell to buy. Just wanted to point that out. I love head and shoulder fake outs because retail trades head and shoulders. They trade below the neckline, so they want to see a break below where we kind of where we stop. You can see where the neckline is right there, where the shoulder and head and other shoulder come together. When it pushes down, it breaks through, and they sell it. And that's what creates the liquidity, and that's why price goes right back to the upside. So anyways, what's going on in here? On a lower time frame, we can see that with the swing points, higher high, higher low, higher high, higher low. We're still respecting structure, looking for a higher high now. Lower on the lower time frame on the 4 hour, 1 hour, high, low, high, low, high, low, high. This is more of a liquidity run. Okay. I wouldn't classify that as a break of structure. We didn't really close below it. We kind of just wicked and then continued. And we're still overall bullish anyways. So if we think this is a break of structure, you know, we have to just be careful, because this could also just be an overall pullback for a continuation. So I had a question the other day about some pair that was going extremely bullish, and it looked like this, and price went like that. And I'm saying on the higher time frames, price could, because it was going like this, right? Just because we may have broken doesn't mean it's going to break structure, pull back, and short off. We're in a bullish market. We need to be looking for overall buys. And that's exactly what happened. Price ended up just trickling right back to the upside. So the same goes for stuff like this. If we're bullish, don't jump the gun to say, oh, okay, we broke structure, we're going to pull back and go short. It's just an overall pullback here for a continuation. So always respect the structure. Do not fight the structure. It will screw you over every time. If we scale in again, 1 hour time frame with this structure, high, low, high, low. On a lower time frame, this is a lower time frame level of demand, but so you guys can see, this is our last selling volume. So that's the higher time frame demand right in there. We had the reaction from it very nicely. If we scale in again, you can see the counter trend this way. Low, high, low, high, low, higher high. Failed to make a lower low, higher high again. Lower time frame right in here. We swept liquidity, kind of retested, last sell to buy. We actually mitigated that level very nicely, failed to generate a lower low, and we made a higher high comparison to that high. So now we can see that the lower time frames are now bullish again. So if we zoom back out, now the higher time frames are still bullish. The lower time frames are bullish. The higher time frames are bullish. The higher time frames are bullish. And even the higher time frames. I can go on all day. Still bullish. We're looking for buys. That's what I'm trying to say. Okay. Everything points to buys on NZD JPY. New Zealand dollar and Australian dollar are extremely bullish across the board as well. So you can have that as correlation. So where am I looking to get in? Well, I'm looking for a higher high. First target would be the bottom of this blue box here. But really, there's no clear level in my opinion. I guess you can say your first entry could just be right there. Right at the top of the demand. Selling volume, higher high. Just swing points, guys. High, low. So maybe something like that. If we dig a little bit deeper, then maybe we can see, I don't know, something like this. I don't know, just lower time frame demand in there. Something like that. That's kind of what I would have. It's not very clear. But it looks really good, because if we look at the counter trend going this way within this pullback, because every pullback kind of has some sort of counter trend, we can see low, pullback, low. Where's the supply? Right there. Reaction, failed to make a lower low, higher high was formed. So this is the demand. However, this is the start of the swing point, sell to buy. So you could just have a small retracement into that level to go long. So I'm going to have two levels here. One will be at, we're going to call it 86.3. It's really 86.293, I think, but to make it a psychological level, that could be our first entry, and this could be our secondary entry here. So either like this or like that. So what we could do is you could do one of two things. Entry one obviously is there. Stop loss could be where we enter entry two. You could put the stop right there. If we hit the stop, we're in entry two anyways. Entry two stop could just be below the low. Okay. You could also put both entry one and entry two stop loss below the low as well, whatever you'd like to do. But that's what I would look for in terms of top-down analysis, kind of how I would do it. I know, guys, this may be a little confusing because I know I went over it very quickly. These live sessions are not supposed to, be, my entire course where I break everything down in its individual component, doing it step by step and showing you exactly what to look for. That's not the point of these lives. The point of these lives are just to show you where I'm looking to possibly get in, the overall directional bias, areas of interest to look out for, and then just some supply and demand and institutional terms and concepts that's playing out on a day-to-day basis. That's really what I'm attempting to do here. So that is all that I have in terms of my stuff. Let me see if I have anything else. I think that's everything on my list that I want to go over. Now, there are other pairs that I could look at. It's just I don't see much on it right now. Not much is very pretty on the other pairs that I didn't go over. I don't know if Aiden's still there. We can answer some questions now. How do I draw such straight trend lines with the brush? I don't know. Maybe practice. He's asking when I just take that black line and I just draw on my screen, how I make it so straight. I don't know. So I close all my positions over the holiday. So from December 16th this time. Good question, Mark. So yes, I will try to. However, I'm not going to look for new trades. However, the trades that are currently still active, I'll leave. I'm not going to close them because obviously they're still valid. I mean, the market doesn't just stop on December 16th. It's still going to play out how order flow is supposed to play out. So, but yeah, to answer your question about pending orders, yes, I delete them. Yes. Just because I don't want to have to deal with managing those trades while I'm on holiday. Also, volume starts to really diminish and slow down after the 16th. I mean, 16th is a Friday, I believe. So that Monday is the 19th. And we have just 1 week until Christmas time. So, yeah, the markets are probably going to be slow after that. I just try to stay away. Not only because they'll be slow, but also because it's the one time a year I get to have like 2 weeks off and spend time with family. So, yeah. I don't look to trade after the 16th of this year. I'll look to delete all pending orders. And I'll still manage the current trades I have. I'll check up on the charts on occasion and manage out. But yeah, hopefully that helps.
It's not even worth it, honestly, to try to trade during that period of time with low volatility.
Yeah. Right.
Everyone's taking off that time anyway. So might as well enjoy life, right?
Yeah.
Enjoy family time.
I have a problem in knowing the objective of a pair. Okay, here's probably the easiest thing I could say to that. When you're looking for an objective, obviously you're trading on a specific time frame, not a specific time frame you're trading off of. What I mean is it's like if you're looking like at the 15-minute, 30-minute, 1 hour, 2 hour, that sort of region, go out to like the 4 hour or daily and look for that trend. So for instance, because this is a good question I think I should probably address. If, like for instance here, right, this is the objective, right? If we're trading, if we're bullish, this is the 1 hour time frame, right? We could go to the 4 hour, we could probably see the same thing. Then just zoom out to the higher time frames and just really zoom out and just see, okay, well, we're extremely bullish here. Where could we stop before price actually goes short? And that's kind of right in here with this area of supply. What I would say to that is also every time I open a position, let's say I'm looking to buy, try to look for a sell. And I mean, don't actually sell it. Don't actually look for a sell to actually sell it, but look for a sell because if you can pinpoint areas that you could potentially take a sell from, obviously you wouldn't take a sell from that level, but if you can pinpoint areas that look good for potential sells, that's where your objective should lie. That's where you should probably take your partial profits or take your overall profits or whatever. If you don't identify any region that price could come into and reverse from your overall trade, leave it because price is probably going to continue in your overall direction. If there's no institutional reason, if there's no, and I know a lot of people
think about drawing
block, but I'll just use it once. your order block or your supplier demand level, those are the areas in which you should be looking to take your profit from. Areas in which price could have a reaction and go against your trade.
Yeah, I mean, that's also if you are trading counter trend for the most part. I mean, there should be some sort of draw on liquidity that typically I like to target, right? Old highs or old lows, right? If the trend is to the upside, then I'm immediately, my eyes are gravitated towards on the higher time frame. Where is that true draw on liquidity? Where are those higher time frame, equal highs or equal lows or singular wick high or singular wick low that more than likely price is attracted to, gravitating towards to run out as an overall objective. Right? It's all that runs the market is liquidity at the end of the day.
Yeah. Yep, exactly. Why do I delete my pending orders? Specifically for what, December 16th when I stopped trading? Just because, well, for one, I just want to be done with the year, right? It's a couple weeks before the end of the year. I want to spend time with family, friends. I don't want to have to worry about trading. This is my time of the year, my one time that I actually take off. I mean, if you guys have been with me for, at least a year, you would know that we don't ever take off. We don't take vacations, like hardly, maybe once a year for like a couple days. But this is the time that I like to spend time with family. So I just get rid of all my pendings. Not to say that they're not still valid. I'm sure they are, but I just don't want to have to deal with them because I want to, just hang out with friends and family. Also because after December 16th, well, that was like the last Friday before the last week before Christmas, if that makes sense. The markets are going to start to become less volatile. Just lower volume will enter the market. Just because this is the time of year that volume starts to slow down and volatility starts to slow down. Volume is lowered. It's because all the hedge funds, institutions, they go on their little Christmas holidays and not a lot of people are trading. So that's just why I don't like to trade low volatility or low volume markets because price moves extremely slow. Do you leave limit orders or do you wait directly for your session before looking for entries? That's a good question. Sometimes a little bit of both. I usually wait. I usually, keep my limit orders open if it's not really near my entry. If I'm not like nervous that it's going to hit my entry overnight or, at the wrong time of day. I tend to just leave them open because if the levels are valid to begin with, and if it comes into that level, it should react. And if it doesn't react from the level, then my original level was invalid anyways. So time and price is definitely extremely important. It really is. However, I tend to leave my orders open unless if I am doing analysis during Asian session, which is my evening time, and if I see price approach my entry within just a few pips or like 10 pips or so, yeah, I'm just going to delete it because I can mitigate that risk.
Yeah, if you're looking at a level on Euro USD, more than likely you shouldn't be getting activated during Sydney session or Asian session. That's per level more than likely during London or New York overlap. So that's just the kind of rule I go by.
Yeah. Let's see what color is your Bugatti? Not that rich, not yet. It's funny. Would it be fair to say that when the markets are choppy, moving sideways, it's actually maybe creating order blocks for the move in line with higher time frame? Yeah, I would say so. I'll show you an example of what you're asking there. So something like AUD JPY, right? When the markets are moving sideways like this, they're kind of in a channel. And if we sell to buy, expand out, that would be an area of higher time frame demand, right? To pull back into and look for continuations to the upside. Same thing with, right in here. This is the 4-hour time frame, remember. Lower low, lower high, lower low, lower high, lower low, lower high, chop, 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 consolidation, expansion. Sorry if you saw that message, guys. People are just impatient. Pulling back into that level of demand. To answer your question, that could be a possibility. Doesn't mean that we should try to attempt to see what direction we're going to break out from. Right? We don't want to trade within these channels. We don't trade sideways. We don't trade choppy markets because there's no clear direction. So in here, I'm not going to be placing lower time frame orders unless I have a clear lower time frame. Like for instance, I was originally looking for this level of supply. It would be if price, came in, it came like this, and swept all this liquidity and had a big buy to sell breaking structure. Maybe I would take a small position there. It would be within this overall channel. However, it would still be an institutional sort of formation. But overall, yeah, I mean, if you're chopping, like sort of what GBP NZD is doing right now, we are chopping at our higher time frame level of demand. If we end up like exploding to the upside, then yeah, that would definitely be that level of demand in which we would look to pull back into for a continued long, something like that. Hopefully that helps. I prefer scalping or swinging. Neither. I'm more of an intraday or intra-week type of trader. I don't look at I don't trade off of the daily or weekly time frames. I don't like to hold for weeks or months at a time. I'm not a scalper either. I don't really like the lower time frames. It's just a lot of noise. I mean, yeah, all of the concepts can be applied to the lower time frames as well. 100%. Liquidity and everything is present on any time frame you look at. But the lower time frames create a lot more setups that can be invalidated, that are invalid, that are not real setups. And a lot of it's, if you were on last Saturday, I think it was last Saturday, someone asked me about why I don't really trade 1 minute and all that stuff. Well, if price comes into my higher time frame level, maybe accumulates, breaks counter trend structure, pulls back into like a 15-minute level, and then does the same thing, and we keep scaling in, then I have like a 5 minute or 1 minute entry, great, then I'll have that. However, I'm not just going to be looking directly at the 1 minute or directly at the 5 minute in order to be looking for trades. I have to have it in alignment with the higher time frame. But even so, I also don't like just trading the lower time frames because it creates a lot of psychological stress. And I had a perfect example last week about it. It's like, why don't, for instance, I'll just give you one example. Why don't I, let's see. Let me go to one that we're currently in. Oh, GBP JPY. That's a good one. Why do I just place my limit order right at the overall demand level? Why don't I look in here for lower time frame confirmations or lower time frame candlesticks or whatever? It's because that, let's just say, if I scale in here, let's just say there was a lower time frame, and I know it actually did come all the way into this demand level here, but let's just say there was a 1 minute level right there. I'm just going to say. So I'm going to extend that over. Let's just say it was right here. And let's just say I was so pumped because I could get like a 1 to 10 or a 1 to 20 risk to reward out of it. And then all of a sudden I see price miss and it just goes long. When I could have easily just entered at my overall level and had a 1 to 5 or a 1 to 10 or whatever this is at this time. What is this? This is a 1 to 20. So that's not a good example. Let's just say that was like a 1 to 4, 1 to 5. Still a good risk to reward. I would miss by a few pips because I'm trying to be perfect every single time. So with psychology, with a new trader or a retail trader or just someone who doesn't have professional experience, they would look at this as like, oh, wow, I got the entry right, or I got the area of interest right. I had the original entry right, but I didn't get it off my 1 minute time frame to hit my huge risk to reward. Now I have FOMO, and now I'm looking to buy when it's up here instead of where you should have been buying either down here or down in here. In this case, it missed, so you just have to leave it. But people don't do that, and you guys know that. You all have FOMO at some point. You guys do not have professional psychology. You can't admit that you do. I even don't. I still have slip-ups too in my own trading. We're all human. However, that's why I don't trade lower time frames, because that kind of psychological stress. I would rather get into the market, place my order, and just wait. If it goes long like it was in drawdown for what? When I first got in the trade, I didn't even see an expansion for almost 2 days, right? But I was just patient. Now we're finally going in the right direction. I don't have to worry about all the lower time frame garbage that's in there. Not to say that it's not valid. I just don't like to trade it because it's just, it would require me to, not all the time is it going to hit your exact 1 minute or 5 minute time frame level. Not every single time. And that just creates a lot of psychological stress on the trader, right? So hopefully that helps. That's just the reason why I don't do it. Yeah, burning mental capital, exactly. I haven't seen anything this week. Yeah, this week hasn't been the best in terms of good-looking setups. That's just what happens sometimes. We just can't force anything. You know, some setups, there are a ton of them throughout the week, and we have a ton of trades, and some weeks not so much. Aiden, you're on mute, buddy.
Sorry. He said, how do you draw such straight lines with the brush? I've always wondered how Nate could do that. Mine are all over the place.
I don't know. I just do it so often, I guess. It's practice. Do I use currency indexes for extra confirmation of supply and demand levels? Like the dollar index? I mean, yeah, look at it. It's not going to be like my deciding factor in if I take a trade or not. It's just if it's there, great. If it's in alignment, I look at the dollar index to see like the overall bias, to see, you know, if we could be pushing lower or higher on the dollar, what would that do to other dollar-based pairs? That's really all I use it for. But each pair is its own. You know, if Euro USD is telling me to buy and I see that price could come lower on the dollar index, I'm still going to be buying Euro USD. It's telling me to buy, I'm going to be buying it. So, or excuse me, that's a bad example. If I'm looking to buy EU, that means dollar weakness. If I see dollar index pushing higher, I'll still look to buy the EU. I'm not gonna stop buying EU just because I see the dollar index pushing higher. Because you shouldn't base your decision off of something that you're not trading. You're not trading the dollar index. Why we should be basing our decisions off of the dollar index? We should be basing our decisions off of the pair that we're trading, if that makes sense. So just keep it simple. Why do I hate gold? I don't like how it moves. A lot of people like it because they think they can make a lot of money off of it. I make as much money off of AUD CAD that moves 20 pips a day than someone who can trade gold that moves 1,000 pips a day. It's all based upon risk to reward. It doesn't have to do with pips at all. Can't stress that enough. I don't like gold. I don't like the way it moves. Follow smart money, sure, everything does, but it doesn't look good for smart money setups. It just doesn't look the prettiest, in my opinion. So I never really enjoyed trading it. Best content to study to drive home smart money would be your older videos. No, it would be my smart money course, 100%. That will teach you everything you need to know about exactly how we trade. But if that's not in your, if you're not financially capable, then yeah, older videos, smart money concepts videos on YouTube are helpful.
We have a whole series outline smart money concepts on YouTube as well as on Trading House. That would be a great place to start.
But that'd be a good place to start.
In depth, kind of step by step, organized, foundational approach within our smart money course for our private membership students. So that's where you learn literally everything, our exact approach. We hold nothing back.
Yeah. It's definitely helpful. I mean, I definitely don't tell you everything on how I trade within those videos, YouTube videos. It's a good like surface level introductory sort of series. It does. I mean, I do go into a little bit of depth. I'm not going to lie, I do. But not as much as my course material. If you want to be another Nate. Yeah, funny. All right. What other questions do you guys have? I have like a couple more minutes and then I have to head out. I got some stuff to do.
Nate, do you want to drop the stuff in the chat website?
Yeah, so
I can't comment.
Where can I find the links for course? So we don't sell. I don't sell my courses individually. I can't do that because at the end of the day, and this is the reason why. Because when I'm trying to help someone hit profitability and become consistent on their own, just taking a course isn't going to do that for you. Just because if you learn anything, and I always like to give the example of a guitar, it's just the easiest. If you have the best guitarist teach you how to play guitar, teach you all the strings and chords and everything you could ever learn, you still have to practice in order to be good. You still have to get the guidance, the consistent guidance. Not the best guitarist can come to you and say, hey, this is exactly how I play guitar. This is how you should do it. Great. Never talk to him again. You're still going to fail, right? Same thing with any course that you take. People have the notion that in the expectation that if they take a course, they can immediately apply it and become consistent. It not only takes education, so courses are definitely huge, they're so important for sure, but it also takes the right guidance after you've learned the course material to help you through the process. So that's why I can't sell courses individually. I know a lot of other people do because they just want your course sale. They don't care about your learning. They don't understand the proper way of going about mentoring someone. I can't sell that because you take my course, you're still going to fail initially. It's how it works with learning, the learning process. I have to be able to work beside you one-on-one and help you with continuous education and reinforcing what you've learned through the course every day through my mentorship, which is why I only have one package. That's the only way I can do it. That's the only way I feel comfortable with helping someone, because at least I know that I'm doing the best that I can to help someone become profitable. Now I could sell my courses individually. I could do it all day long, but I'm not going to do that because it wouldn't help you the best possible way. But I'll drop my website in there. You can book a free call with me. We can talk about what it entails and everything. It's required to potentially join our community is to book just a free call just to make sure that it's the right fit for you. I'm not sure why it's not letting me. Oh, there we go. Okay. It's just not posting to Facebook. Cool. Hopefully you guys understand that. That's the reason why I can't do that. I want to be able to help people the best possible way, and selling a course by itself isn't going to be the best way. So am I still holding AUD Chef sell? So unfortunately, guys, I'm not. I hit break even on those. Price was just chopping, and I'll just show you really, really fast before we head out today. Show you what that looks like. AUD Swiss franc. So higher time frame. Remember, we had our original level in here. It was a 2-hour time frame sponsored candle, right? We can see the structure: low, high, low, high, low, pullback, high. We want to. This is the swing point. We don't want to come above this high. This is just a very slow acting pullback for a lower low. So I got in here. We can see distribution all day long, and we still could come short. Absolutely, we could. I'm still in this trade here. I'm in one of them. I'm in the original one, right? Because if you extend this out, it didn't come into that level, right? So that's what we haven't come into that yet. I'm break even on this right now. I'm putting my stop to break even, because if we come any higher, then we're probably just going to push higher. But anyways, there's been a lot of other entries. There was one right in here. There was one right in, I think right in here somewhere. I forget where it was. It was lower time frame in here. It was lower time frame in here. It was lower time frame in here, something like that. And now we can see this huge run that occurred, and it didn't stop me out. I was break even on all of them. And I told everyone on Saturday's live session, if you guys recall, that I'm breaking even on all of these positions, just to, in case we see something like that. Then it would prohibit any potential significant loss. Because if I'm in one trade, 2, 3, 4, 5, and then price just goes like that, now I'm losing 5%. I don't want to do that. You have to also understand what kind of market risk you're subjecting yourself to. How many open positions do you have? So in that case, I'm just like, okay, to protect myself in case we actually just go like that, which price actually did, then I'm break even on all of them. I did take a lot of partials, not a lot, because, I never came down to that prior swing point and never hit my overall level. But once we did make a prior low, like we came down to this low, this low, I'm taking partials all throughout my orders in here. But I did go break even. I'm still holding this one. If it comes up, whatever, it is what it is. I move on. But I'm out of a lot of them. So just trying to be transparent.
So anything else?
Awesome, guys. Beautiful. Any other last minute questions? Anything else to help you guys out? Okay. Can I do anything else for you guys today? Appreciate the love, guys. Thanks for hopping on. I really do appreciate you guys' time. And thank you for taking the time to sit with me today and listen to all of our breakdowns. Really is great to see that you guys really want to learn. I can totally see that because I see all these familiar faces every single day. We will hold a live session on Saturday. I'll drop the link on Friday so you guys can have that day before.
No, we're on Wednesday and Saturday. So Wednesday morning at 8, Saturday at Nate gets on at 10. And we do Smart Money Sundays. I do Smart Money Sundays on our YouTube channel. Every Sunday, kind of, if you missed the live session Saturday, that's also there. Smart Money Sundays, breaking down what we expect to happen in the following week. So check that out. If you haven't subscribe to our channel. Nate, did you put it in there as well into the chat? It's just Ariel Fx.
Yeah, just type in Ariel Fx on YouTube. Comes right up. Let's see. CAD-J hit your stop loss. Yeah, dude, I was so mad about that. It did. CAD-J did hit my stop loss. I was looking at that for a long time. It just goes to show that you could have the perfect looking setup and all of your confluences are there and it's still not guaranteed. And that's just why we have to use good risk management at the end of the day. So yeah, good question.
It's part of the game. Can't get attached to a trade. It is what it is. You lose, you move on. Rinse and repeat. Next trade.
What confirmation you waiting to enter a trade? There's a lot that I could go. I can't really answer that question here. It would just take a lot of it. I would highly recommend watching our YouTube videos to start, getting that understanding, and all our course material helps with that. There's a lot that goes into that, and there's no specific time frame. Okay, I probably said that about 1 million times over. There is no specific time frame to look at. Time frames are just zoomed in and zoomed out versions of the exact same thing. What's happening right now on the monthly time frame is happening on the 1 minute time frame. So it's just how we observe price, right? Price is being delivered only one way. And it's just what you see on the charts. Just are you zoomed in or zoomed out? So confirmation, it's all subjective. It's all dependent upon the setup that I'm looking for, or the setup that's being presented. So I can't really answer that question there, but all right, guys, well, have a great rest of your day. Thank you for hopping on. We'll see you all on Saturday. VIP members, we will talk to you all later today. Take care.